We all know Train Law, or the Tax Reform for Acceleration and Inclusion Law under the Republic Act number 10963 is a tax reform program signed by the current President Mr. Rodrigo Roa Duterte on December 19, 2017. This act was made with the objective to lessen the poverty in the Philippines from 2020 and completely eradicate this poor status of the country by the year of 2040. Technically, it seeks to make the tax system operate in a simpler, fair, and more efficient way that will introduce us to more opportunities, in which it finally took effect on January 1, 2018.
So aside from these objectives, Train Law addresses 1. The bracket on income tax that affects the individual income taxpayer. Second, the tax relief for the public and private sector employees by raising the annual income tax exemption. Third, the issues on paying the right tax for the self-employed and professional. And lastly, building not only the physical infrastructure but also its human infrastructure like facilities and systems that affects and involves people.
Train law particularly is a product of the taxation power of the state, or we could say that the inherent power of the state. The 10 taxes that is included here in the train law. First is personal income tax, estate tax, sin tax, petroleum tax, beverage tax, automobile excise tax, tax on cosmetic measures, document stamp tax, donors tax, and value-added tax.
The Tax Reform for Acceleration and Inclusion, otherwise known as TRAIN Act, or the Republic Act 10963, was signed into law on December 19, 2017, and took effect right exactly on January 1, 2018 by the Philippine President Rodrigo Duterte. On the other hand, the late Senate President Eduardo Angara is the one who's sponsoring the bill of TRAIN Law, while the 28th Senate President Aquilino Pimentel III is the one who introduced and filed this bill in the Senate on March 2017. The Senate voted 17-1 to approve the TRAIN Act. The positive votes were led by Senator Sani Angara, Nancy Binay, Frank Drilon, and 13 others. Meanwhile, Senator Risa Hontiveros is the only one who's against on the said bill. Again, the Tax Reform Acceleration for Inclusion, or the TRAIN Act, aimed to generate revenue for the 2022 up to 2040 vision of the Duterte administration.
One of the features of TRAIN law is the value-added tax, which is one form of the business tax. It is an additional burden that is imposed by the BIR to the business. So aside from the 30% income tax and the 2% MACT, or a minimum corporation income tax, businesses also need to pay VAT. To compute VAT, it is amount divided by 112 times 12, or amount divided by 1.12 times 0.12.
Another feature of TRAIN law is the donor's tax. When a person transfers property to anyone without consideration during his lifetime, the act of transfer is subject to a tax called donor's tax. It shall apply whether the transfer is in trust or otherwise, whether the gift is direct or indirect, and whether the property is real or personal, tangible or intangible. The tax form that is used in donor's tax is BIR Form 1800, Donor's Tax Return.
There are various advantages and disadvantages about the implementation of the TRAIN law in our nation. First of all, TRAIN law is definitely known as the Tax Reform for Acceleration and Inclusion Law, are known as RA 10964, which has been signed by our President, Mr. Rodrigo Duterte, during the year of 2017. It strives to redistribute tax paid benefits in accordance with the Constitution by establishing a system in which affluent individuals contribute more and the poor residents or the poorer Filipino residents receive more from our government programs, other services, projects, especially some of the infrastructure projects in our nation. In fact, TRAIN law is a way to lower the personal income tax. Also, it has an ability to create new wealth and to see its fair distribution Definitely, since I found out that without the taxes received from businesses, other enterprises, from employees, and etc., there will be an impact in our economic status.
I totally agree that the train law has a lot of advantages for the citizens. But for every advantage, there's also a disadvantage. According to Philippine Institute for Development Studies or PIDS, the higher excise tax on oil products and other goods and services have dragged more Filipinos to poverty. Some of the disadvantages of train law is that there is a higher imposition of excise taxes on cars, cigarettes, liquors, and sweetened beverages, and also on fuels. And higher fuel prices can have a trickle-down affecting the public transport services providers, leading to a higher fare.
Let's talk about the economic effect